Okay, players, traders, and haters, welcome back. It's your boy D, and this is D's daily DD for due diligence, right? So D's daily due diligence, guys. I hope you had an amazing weekend. I hope you relaxed, right? I hope you enjoyed some time off, right? And I know I did, right? That's why I don't make videos on the weekend. That's how you know I'm genuine, right? Because I'm only giving you videos on real information, and I always bring the receipts, right? So I like to only make videos Monday through Friday, all right, when the stock market is actually open. And I take the weekend time to myself to research and make sure I'm giving the best information out here, all right? So yeah, remember, I'm not a financial advisor. It's not financial advice, right? So don't take it for that. Take it for educational and entertainment purposes only. So yeah, guys, today we had a nice green day with AMC, right? Everyone should be happy, right? Let's not get too jacked. I mean, the rest of the market was down, and I'm gonna explain to you, in my opinion, why I think the rest of the market was down, right? This tends to happen when a certain somebody, right, says some things, and yeah, we'll get into that information. But so I'm gonna talk about AMC because it had a nice green day. It looks like it was up 7.8% for the day, all right? So that's definitely a win for us. And the shorts are bleeding, guys, right? I have proof of that. I'm gonna show you that information right now too. So yeah, guys, as you can see, I'm not sweating it, and I always buy when I can, right? Buy and hold is the way for AMC. That's what I believe. This is the way, and I'm definitely, happy with my shares that I've been able to accumulate right now over time. All right. So yeah, guys, we're gonna talk about Lucid, right? They put another car to shame, right? I guess they did a drag race, and you just can't believe how fast the Lucid car is. So we'll have to take a look into that. And then we're gonna talk about GME and a little bit about how they're doing the share split. All right, guys. So I have a couple GME shares, right, that I hold, and things are looking interesting on the chart. I'm interested to see what this week brings for sure. All right, so all the actions are happening. For GME, you needed to hold the shares by today, by market close, in order to be eligible to get the share dividend. All right, guys. So yeah, let's do it. Thank you to the subscribers. We're about to cross 300, guys, right? I appreciate the haters, the love, right? So I always say players, traders, and haters, and you beautiful apes, right? All you beautiful people out there, you're all welcome to the channel, all right, guys? So let's jump into it. Right. Let's do it. All right, I'm gonna show you this clip. So what I'm talking about, why the market, in my opinion, is red is because it's called the reverse Jim Cramer effect, right? So whenever he says to do something, you always do the opposite, right? Because he always gets it wrong. So the New York Stock Exchange, whatever, welcomes Jim Cramer and CNBC's celebration of Mad Money, new home at NY. Let's just watch this little clip here. Ringing the bell. There it is. All right, old man. That's enough fun. So check this out. This is from Unusual Whales. The spy is now red on the day, right? That was 2 hours ago. And what he tweeted a while ago was Jim Cramer is ringing the bell at the New York Stock Exchange tomorrow. The last time he did was March 10, 2015, became up until that point the worst day in the market of 2015. The Dow plummeted 322.7 points, while the S&P 500 and Nasdaq both dropped about 1.7%. All right, so that's the reverse Jim Cramer effect for you. All right. Okay, guys, let's jump into this AMC information now. So this is where the short sellers are bleeding, right? So according to this, they bleed 1 billion in 2022, despite the massive share price drops. All right, so even they're still losing money. All right, guys, and they're gonna be, on the hook for more losses as the apes continue to make their moves. All right, and we're just holding, right? As the first half of 2022 comes to an end, short sellers betting against AMC Entertainment posted heavy losses. AMC and video game retailer GameStop came into the spotlight early last year, when retail investors joined forces through the social media platforms and collectively purchased the pair's shares, which resulted in their share prices touching the all-time record high levels. As a result, institutional investors that had bet against the companies lost billions of dollars since they had to buy back the shares at a higher price. The tussle between the two sides of the investment world has continued this year, and fresh data from S3 Partners shows that between January and July 2022, AMC short sellers lost more than 1 billion in mark-to-market losses. So if you want to continue reading this story, guys, I'll put the link down below. It's giving you a little more information, but yeah, they're still losing, right? Because obviously the prices went up, you know, a decent amount today. I think at the peak it was up like 10%. All right, so let's jump into the graph. It's looking pretty good, the chart. We have, I think, the 8th green day in a row. So 1, 2, 3, 4, 5, 6, 7, 8. And things are just looking bullish, apish, guys, I guess can be, because now we just crossed this next EMA, right? So we had made our move here. And what I have here is drawn out. If you watched the last video, it was about the FTDs. And then we're making our moves here. So just get prepared, because the next FTD report was probably going to be insane too. All right, guys. And this 1650 mark, guys, that's the key, or in my opinion. We have taken off from this level multiple times. So if you scroll back here, when it broke up right to 34, it's because we had crossed that 1650, right? This resistance line here, we broke it pretty hard. So we go back to, and you have to pay attention to the flag right there, right? So this is a really good sign for more upside action as we go back. And guess where this broke to, right? So at the 1650 level, right, yep, right here. Once you snapped that, that's when they started having problems, all right, guys? So in my opinion, we are in the squeeze zone right now, right? This is where they tend to lose control. When we get FOMO, we get volume, we get momentum, and this is where they tend to, you know, start to lose control of the price to the upside. So you see this little flag here, right? I've been saying this for a while now. Excuse me. That this pattern is just dragged on. I did the same, you know, pattern drawings for all three of these. And whenever the pattern comes down and it comes back and it tests this, it usually breaks out, right? As you can see it back here too. It just bounced around. When it finally came to the end, it broke out and went up. So that's what I'm looking at right now. That's where I believe why I believe we have potential to really make a move up, guys. Because as soon as we come and test this area, we should be breaking out. All right, nothing's guaranteed, but that's what's happened in the past, and in the same way, all right, over and over. And we're getting to the point. This is the daily chart, right? I always like to zoom out. So if we get to the point where we get the golden cross, that's when all these cross back over. You're gonna see a big push to the upside. All right, guys. That's what usually tends to happen, right? So we can't get too excited. We can't say we're going to the moon tomorrow, but we definitely could have an explosive week or two coming, right? And it's funny how, let's see, August 4th. So the earnings will be on August 4th, right? So around this time frame. So if we reject back, then or at least if we come up and test and then get rejected, right around August 4th is when the fourth test, when this retest would align, right, with as far as the timing, okay? Because the RSI is getting a little hot. It's at 64. It still has room to run. It's been up to 80s and 90s before. If you go way back here, it's been up to 100. So anything can happen. I mean, again, this could be just from the calls. It could be a little bit of gamma, right? They pushed off the orders from Friday until now, right? They put them in. So we might see a little bit of a come down, right? And come back to test this level. But if we don't, we're good. We're looking pretty solid, right? And we want to see that fourth retest around the $20 level in order to make a major breakout. All right. Again, we're sitting at 19.67%, and there's 101 million shares that need to be bought back because they're sold short, right? They have about 500,000, and the fee is about 8% currently. One thing I want to point out here is it's going to be, right, we currently have 39,000 calls in the money. They have this amount to borrow or whatever. We all know those are synthetics, all right? So then you go down, and this is what I want to point out. Right now, we are just killing the shorts. They have got to be bleeding, guys, because you look at the calls that are in the money, 39,000. The puts, there's only 1,939 currently calls or puts that are in the money, right? So a lot of them are out of the money, okay? So I just want to point that out on this. Let's go and look at the options chain, kind of see where the levels are. Today was good because it pushed all these in the money, right? So if you continue to scroll down at $20, right, that psychological bear, there's 8,000. So this week the highest strike is only $30.50, all right? But the peak, the bulk is at $20. So I'm assuming on the put side it's the same thing. Let's see, 20. Ooh, not even. There's not really any volume for them. For the puts, they got pushed out today. All right. So this went up all the way here. There's less and less and less and less puts. All right. Cool. So that's what I got for AMC. Let's talk about GME real quick. It's still in this, piece where it broke out of the long descending triangle. It's trading sideways, but when you go to the EMAs, this is very bullish, guys. It's above the 200 EMA, and this is starting to cross. All right. If you would get the cross, it's called the golden cross, and that tends to lead to some heavy price action. But remember, so you had to own the shares today. By today, you had to buy the shares because on July 22nd, GameStop will trade on a split adjusted basis. If the stock price is 140 before the stock split, you'll be able to buy the shares at around $40 per share. After the stock split, if you don't get a chance to buy GameStop before the stock split, you can always buy shares after the split if it makes sense for your portfolio, right? So just this is a whack article, of course, it's from the Motley Fool. But they're just talking about how there's been recent, splits as well. So the 4-to-1 is not that much actually. Like Amazon did 20 for one, Shopify did 10 for one, Alphabet, Google did 20 to 1 too. All right. And remember Tesla too, when they did their dividend not too long ago, right? The share dividend that caused the shorts to cover right a few weeks after. It didn't happen the day of, it didn't happen right away, but not too short after, you start to see the price go crazy. So imagine for GameStop, if they do the split, drops to 40, and then the shorts cover and there's a massive buying rally, and again it goes to the hundreds. That's possible, right? Not guaranteed, but it's definitely possible. So yeah, just the infamous meme stock of 2021 is back on investors' radar again. This month the company announced the 4-to-1 split, which will take place after trading closes on July 21st, right? So it's this week, guys. It's an important week for GameStop. And of course, if GameStop starts to run, guys, AMC will go with it. AMC moves with GameStop. GameStop moves with AMC a lot of times, right? Like 90% of the time, right? So I'm excited for that. That's just more, fuel for the fire. Let's see if anything's happening. So GameStop's currently at 147. And what I am interested in to see if they have to cover, right away. I don't know if the shorts, according to the information that we had, they had up until the last business day before the share dividend, 24 hours. Because I think if not, if they continue to hold, then they're responsible for getting those 3 shares for the borrower, right? Because somebody has to, whoever technically owns the share is gonna, or is holding the shares, is gonna get the shares, right? So if the person or the bank or the lender that lended those shares to the short seller, if they want them back, they need to recall them in order to get their dividend, right? So that's what we're all waiting on to see. Let's move on to Lucid, guys. Lucid Air GT performance makes 807 horsepower Dodge Charger jailbreak look slow. The Lucid has around 200 horsepower more, but it weighs a good few hundred pounds more too. So there is a video. I'm going to read some of this, because it's pretty awesome and interesting. And it's amazing how far electric cars have come, right? And yes, I hold Lucid, right? So just know that I am bullish. I'm the long term. I'm going very long on this, but I hold around like 55 shares of Lucid right now. So the 2022 Dodge Charger SRT Hellcat Red Eye wide body jailbreak with its 807 horsepower supercharged V8 is one of the quickest sedans ever made. Although it's still far off the level of performance shown by the new Lucid Air Grand Touring Performance GTP, currently the most powerful and quickest Air you can buy. The 1005 horsepower GTP sprints to 60 in 2.5 seconds, and it maintains its very high rate of acceleration all the way up to its top speed of 168 miles per hour. The Charger hits 60 miles per hour in around 3.5 seconds, but it has a much higher top speed at 203 miles per hour. But in this quarter-mile drag race setup, the throttle house is never enough to stand a chance. The Lucid GTP just sprints ahead both in the standing start and rolling races. It frankly makes the Charger jailbreak look slow, and it really isn't, right? They're both loaded with horsepower, but it's just the way that so the Charger, it only has the rear wheels, right? So it's spinning a lot of times off the start. So compared to the Lucid Air, it has a all-wheel drive, right? So it tends to it speeds up a lot quicker with all that torque. So the weight, there's the weight difference too. So yeah, it's just cool to see. And here's the video. I'll put the link to down below if you guys want to watch the video. All right. So yeah, that's crazy, right? How fast the Lucid Air is, all right? So that's awesome. And here's the graph. So this is the 2-minute chart for Lucid. Today it did have a nice rally in the beginning, and again it keeps struggling at $20. That's a huge resistance point for Lucid. Let me see what the volume was here real quick. So the volume was 17.2 million. That's pretty low for Lucid. It could definitely be a lot more volume, right? So that $20 barrier, right? So I'm not playing calls or options on Lucid right now. All I'm doing is trying to buy shares and add to my portfolio. But this is the daily chart, and I've been, trading Lucid and holding Lucid now for a while. At the beginning, I used to trade it. Now I just hold it. So it's following the subtrend, right? And it's passing the EMAs, right? That's what's good too. It's looking bullish as long as it continues to go up this. But it looks like it got rejected here, right around the $21 range, right? So you would need a good break. And even with this good news, see, there was a little rally, but today it ended up just going with the rest of the market down, and that's what's amazing, right? While you have AMC and GME going up, the rest of the market is kind of coming down right now, right? So that's what I'm looking forward to the next week. I want to see if it can definitely come back and bounce, right? Start making its way back up and retest this EMA as far as the chart goes. And it, like I said before, it has heavy support here at the $17 level, right? So you already have a triple bottom. As long as the market can continue to sustain the coming days, right, then we'll see that Lucid will follow. So yeah, guys, that's all I got for the information today. Just be careful with the reverse Jim Cramer effect, right? I tend to do whatever the opposite of what he says is, because I've seen him tell people to buy things like Netflix, right, when it was at 700 and some dollars, and right now Netflix is just, I think, in the hundreds, 100 and some, maybe 200, I don't know, but it's not looking good, and they're definitely losing subscribers and so on. So don't get caught holding the bag, right? Always make your own decisions when investing in the stock market, guys. So thanks for coming back. I'll see you guys tomorrow.